Hey guys, this is Kevin from Trader Circle, and I just want to talk about trading ranges today, how you can kind of identify them and how to trade them. So with trading ranges, right? What a trading range essentially is, right? It's a period of time where the stock falls into consolidation, right? And where it couldn't break a resistance or a support. So what it does is it'll bounce off of the resistance, go down to the support, bounce off of the resistance, go down to the support, and so on, right? The good thing about trading ranges is that, for example, this is one right here. These two are ranges, right? So what a trading range is, right? How to trade them, right? Like this range right here, these two, right? Since you're looking at a 4-hour chart, you have to anticipate the move, right? When you anticipate the move, you can't, you can't expect to day trade this, sell it in like 15, 20 minutes and expect to get the full movement. You're looking at a 4-hour chart. Each candle represents 4 hours, right? It represents 4 hours. So therefore, when you are looking at a 4-hour chart and you want to trade like a range breakout, for example, right? You have to swing it, right? That's the only way. And that's the only way you're going to catch the move, basically, right? Because this range, if you were, trying to trade this day, it didn't even, kind of break out of that range until like 3 hours into the day, right? And if you're looking at this from a 4-hour chart, and you got to kind of imagine like how big the candle might be, right? You got to understand the average true range of Tesla, for example, right? It moves like $60, $70 per day. So, do you really want to just try to day trade this? Or do you think that it's something that you can swing? Right? You got to think in terms of probabilities. Okay. When you see that there is enough volume to support a breakout, for example, and to kind of figure that out, what you can do is you can literally look at the past few candles and how the volume was. And if you're approaching the breakout and the volume increases, right, that means that that's going to drive demand, right? Resistance to support is all about supply and demand, right? When demand exceeds the supply, then obviously the stock goes up and vice versa. So when you're trading ranges, it's important to look to focus on what time frame you're looking at first before deciding what contract to buy for your options, whether it be calls or puts. Okay. Let's look at another name, Roku. Let's look at an hour chart on Roku. Oh, okay. See, not just ranges, but I'll talk about these patterns too. The EMAs I have on right now, it's the 9 and the 21. Other than that, I don't like to put anything else on the chart because trading price action, in my opinion, is like the best way to go because in trading, it's literally all psychological, how you're able to kind of execute in times of uncertainty, right? Because that's what you're facing every single fucking day, right? Every single day you're trading, it's all about uncertainty. You don't know what's gonna happen. You cannot predict the market, right? It's just based on your execution and how long you stay in the trade, how you react to certain price fluctuations, right? That's why it's kind of important to kind of attempt to get the best entry, right? Obviously, you're not going to know whether it's the best entry until you catch the whole move. But if you've seen a pattern that you've done, that let's say you've executed 6 trades pretty well in terms of execution, in terms of entry, in terms of exit. So you want to evaluate that, right? You want to see, or you want to go back and see, oh, where did I exit exactly? Why did I exit? Why did I enter here? Right? So when you look back at what you did, whether it be something you did right or something you did wrong, right? You got to kind of take note of that so that next time, right, you can limit the mistakes that you can potentially make because now you're kind of aware of what you did, right? Because some people when they trade, it's like they make fucking money, but they don't even know exactly what they did. So it's like it doesn't make sense, right? Now going back to this range, this is Roku. This is a 1-hour range, right? You can see on Monday we pushed up after when the market was over. We pushed up after hours. We pushed up. We stayed there for pre-market and we couldn't break it. Couldn't break it. We went down. Okay, went down, went up, went down, went up. Now on Wednesday, okay, on Wednesday was when we kind of saw the initial breakout during the day, right? So automatically you should already be like, okay, this thing just broke out fully, right? this thing was consolidating for the past 3 days, right? If Roku has an average true range of like $10, so an average true range is how much the stock usually moves every single day on average. So let's say Roku has a potential, has a trading average, a trading range, an average true range of $10, right? That means that once this breaks out, right, you can there is a potential, right, in terms of risk to reward, right, that it can move $10 in the direction that you want it to, right? So let's say you swung this, okay, you would have opened at about 120. There was literally no selling pressure in the morning at the open, so a lot of people could hold through that, and it ended up topping off at 130. And let's say you bought it at 112, you just caught a $20 move. So these things are very important right now. Other than trading ranges, right, you also have to look at patterns, right? So this trading range led to a breakout, which then led to a bull flag, right? When bull flags happen, this means that buyers are stepping in, right? So buyers stepped in here, right? Sellers tried to push the price down. We created a bull flag because the buyers were strong enough, and then eventually it broke out. Now this is another swing opportunity too, right? When it breaks out of this bull flag, right, you can potentially swing it to the next day. Okay. So that's all I'm gonna talk about here. I just wanted to make this quick. I mean, here you have this triangle. I'm just saying that patterns are very important for you to look at. So my next video, I'm most likely going to talk about the different patterns that you can find on different time frames and how to trade them effectively. I hope you guys like this video. Make sure you guys drop a like.